Owning rental properties comes with inherent risks. Effective risk mitigation is essential to protect your investments and ensure long-term profitability. Let's explore key strategies to manage and reduce these risks. Maintain a cash reserve for unexpected expenses, such as emergency repairs or periods of vacancy. Conduct thorough market analysis to avoid high-risk markets that can lead to underperformance. Carefully inspect prospective acquisitions to avoid costly deferred maintenance and structural issues. Diversify your rental property portfolio across multiple properties to spread risk and enhance financial stability. Proactive property maintenance prevents minor issues from escalating into costly repairs. Schedule regular inspections to identify and address maintenance needs promptly. This not only preserves property value, but also keeps tenants satisfied, reducing turnover rates and associated costs. Select reliable tenants by implementing a rigorous screening process that includes background checks, credit history, and references to minimize the risk of defaults or property damage. Draft clear and comprehensive lease agreements to establish expectations and legal protections, reducing the likelihood of disputes and ensuring smoother property management. Securing appropriate insurance is a cornerstone of risk management. Landlord insurance protects against property damage and liability claims, while umbrella insurance provides additional liability coverage beyond standard policies. Make sure your insurance coverage aligns with your property's value and your risk tolerance. Holding property title in individual LLCs further shields personal assets and other rental properties in your portfolio from potential legal actions. Protect and grow your rental portfolio with OfferMarket. Membership is free, and your benefits include access to off-market properties, private lending solutions, landlord insurance rate shopping, market insights and community support.